Hey guys, my name is Charlie Shamia. I'm the CEO of a multi-state mortgage company called Sonic Loans located here in Michigan. And today I want to talk to you about down payment options. So let's assume we're talking primary residence where you're going to move into the home. There's a few different options you have for your down payment, and it'll depend on your circumstances or your scenario. If you're doing an FHA loan, that's commonly known as the lowest down payment option if you have a down payment. And on an FHA loan, that is 3.5% of your loan amount. Now, it's important to understand everything we're talking about is just the down payment. Let's say you're buying a house for $100,000. That means the seller is getting $100,000. The down payment portion would mean you would pay $3,500 to the seller and the lender will pay the remaining. That's the loan amount, okay? So if you have 3.5% and $100,000, that would mean $3,500 is your down payment portion, the skin you have in the game. You're gonna have other costs like establishing an escrow account, paying your first year of insurance. You're gonna have whatever your lender fees are. You're gonna have title fees. Title companies have to verify that there's no other liens on the home, transfer the title and deed into your name, as well as other various costs that you'll have when you're buying a house. And you look at your loan estimate to verify what those are. But your down payment on an FHA loan, that would be the minimum 3.5%. If you go to a VA loan, if you served for our military, thank you for your service. And to thank you for your service, a VA allows you to put 0% down. As long as you have your eligibility, then you could put 0% down on a VA loan. You still will have the closing cost. You can have those covered with what's called seller concessions to where you have the seller pay for them, but they're still there. So it's important to know that. It doesn't mean zero out of pocket for a VA loan. USDA, same thing. You could finance a little over 100% of the purchase price on a USDA loan. It just has to be in a rural area, and you can go to usda.gov to search if the area you're buying in is considered rural. And if it is, you can do 100% financing on those, a little over actually, on a VA loan. And then on conventional loans, within the wheelhouse of conventional, the minimum down payment you have is 3% down. There are programs that'll give you a grant of 2% of that. So you can actually put 1% down on conventional. If you remember what I said earlier about FHA is known for having the lowest down payment, that's been a thing for a really long time until as of late. Freddie Mac has come out with some incredible programs where they're allowing 3% down, where they're allowing the lender to give a grant of 2% to where you're only putting 1% out of your pocket for the down payment purposes. Typically, conventional loans, you want to see 5% down. That's where the pricing gets a lot more aggressive. But if you're a first-time home buyer, the pricing is really good even with the 3% down. So it's important to understand the scenario, or at least your loan officer understands the scenario and kind of can go over each option to see what makes the most sense for you, what's going to give you the lowest overall monthly payment, and what's going to give you the lowest overall cash due at closing, and go over those options with you. I hope that answered some questions for down payment. If you have any other questions, feel free to reach out to us at any time. Go to sonicloans.com and connect with our team. Thank you.